What is going on, everybody? Welcome on into today's Sunday night live stream here ahead of this week in the stock market. We're going to cover a bunch of stuff here in today's stream. I'm running up a little bit early because I don't know, why not? I kind of had a late lunch today and I was like, I don't want to eat dinner like right now. So I'd rather do the stream right now and then eat dinner and just like relax later. That's the plan. So we're going to run a stream here. It might be like an hour, hour and a half. Why not? And we'll see how we'll see what's good. We'll see what's good for this upcoming week. Should be a good number of setups, at least across individual names, and we'll see how the market wants to react to the new data that we get, which we're going to cover exactly that first. Because let's dive in. So let me just refresh this to make sure we get the updated week of economic data, Fed speakers, all that. Here we go. So today is Monday the 20th. Of course, market is closed. Okay, we have a holiday. Market's closed. Although futures did trade last night from 5 p.m. Central to about noon Central today. They're about to open up in 5 minutes. So we're going to get a view of that here in about 5 minutes. Flippa's in the house. What's going on? Hope you guys had a great weekend. I had a pretty decent weekend. I mean, the weather has now officially turned. Summer has begun here in Austin, Texas. I don't see a day in the forecast. Let me just double check really quick. Like, I don't see a day in the forecast below 75 for like the next like 2 weeks, which is awesome. I love it. I just love it. Got some sun, a little bit, not burnt, but a little bit of color the past couple of days. Man, it just feels good. It feels good again. The sun is shining. It's nice and warm, and you can just wear whatever you want. You don't have to worry. SNDX after, yeah, I can double check into that in just one sec. But let's first jump into the news. So this week, U.S. services PMI coming out Tuesday, 9:45. That's kind of a dumb time, to be honest with you. I'm not sure it's a humongous deal in terms of this data, but it could move the market. So just be careful the first 15 minutes after the open tomorrow morning. Home sales at 10 a.m. 9:45 a.m. It's just like, okay, really? Like, just make it 9:15, make it 9, make it 9:30. You know what I mean? Not 9:45, really. 15 minutes after the market opens. It's kind of a random time. Wednesday, next big thing is Wednesday. We have the FOMC minutes from the meeting like a week or from 2 weeks back, whatever it was, whatever the meeting was. They have the minutes coming out. Again, nothing should be insane in those minutes by any means. People always hype this up. It's, market might shop around all day before that, which is fine, but this is nothing in, like, they're generally speaking is nothing insane. The bigger news is we're about a month out to the next FOMC meeting, March 22nd, and the probabilities for that 25 versus 50 basis point rate hike have clearly been shifting towards that 50. Not insane, but this was essentially, there was like no shot of a 50, about a month ago or whatever it was. And now it's a 21% chance that we see a 50 basis point rate hike from the Fed and a 79 for a 25. Again, we're still kind of favoring the 25. I don't think it really matters, to be honest with you, in the grand scheme. You look over across the board and you'll say, oh, people are going to go crazy and they're going to go wild for the 50. And they're like, oh, look at this. The bulls are effed. The bulls are fucked. Like, let's go. Again, right? Market is already kind of shifting that way the past like couple of sessions anyway. And it's, I think, more of a matter of like, okay, if they do a 50, we're going to get to that end, faster, and they want to be done faster and whatever. Who cares? I don't think it really matters, 25 or 50. The Fed, I think, would like to probably do, or Powell would probably like to do a 25 and kind of like ease us through and do a 25 until he's like, okay, I got to stop, versus like a 50 after kind of backing off from 50s and 75s to a 25. So I don't know. That's just my take on it. Again, the trade here, right, is bond market most likely is looking over the hump here. Like, how many more months are left before either there's a massive problem and they're going to have to cut rates because they cause a problem, right? Or eventually we're going to have to start coming over that hump and, they just start kind of holding them and then they cut them maybe next year. I don't know. Whatever the timing is, right? The reality of how much more to go versus how much has already happened, like, we're at the end, essentially, in my view. Of course, it could change, but that's kind of the take on it as of right now. So that's on Wednesday is the Fed meeting minutes. Thursday, jobless claims. That's kind of good. GDP for quarter four, first revision. I'm already seeing Let's see if I can pull up the Atlanta Fed GDP Now forecast. So check this out. So they're currently forecasting as of last week a 2.5% for quarter one. Okay, for quarter one of this year. So this is what we're looking at. Quarter one, that is going to be that's a revision, I believe. The data that we're going to get on Thursday is the first revision. So they already came out with that data, I believe, at the end of January, and then we're getting the revision. So they always revise those numbers like every month going after that. So Atlanta Fed, Bostic, by the way, is also speaking on Thursday as well. And he's the, I guess, head or the president, however you want to call it. Yeah, president of the Atlanta Fed, which has this GDP Now forecast that's now giving us a 2.5 for quarter one of 2023, which, again, if this comes in positive, that means there won't be a technical definition of a recession confirmed until at least quarter three, because you need 2 quarters in a row of negative GDP. So you would need to have, let's say, the quarter two and quarter three negative. Okay, recession at the end of the quarter three, or let's say quarter three and quarter four negative. Okay, that's confirmed into 2024 that, hey, we're in a recession now, yada, yada, whatever. So that's just kind of, just like not a humongous deal. I mean, I think we'll probably at some point get some negatives, who knows if they're going to be back to back and how bad and stuff. We'll cross that bridge when we get there, I think, at this point. But just kind of a, something to keep an eye on. At least they're forecasting for the Fed, or the Atlanta Fed is now forecasting way over consensus in terms of quarter one of this year with a positive GDP number. I think that's really due to the fact that the job market's been decent. So it's been holding up. So, I mean, I think it kind of makes sense logically. And then I think Friday's the biggest day in my view in terms of this week's data because we got PCE, okay, consumer spending data and PCE. If I had to guess, I mean, consumer spending, personal income, I would imagine these numbers are gonna, consumer spending may stay pretty high. And why? Because people getting their tax returns back, and a few extra bucks, maybe getting a few bucks back, and so people might have a few extra dollars the first couple months of this year, and then maybe that slows down. And that's kind of my take on it. I think we're seeing that in the car market. People are talking about how a lot of used car prices are still kind of staying pretty high, or actually have bounced back up this past couple months, because maybe that has a factor to play into things and whatnot, or just kind of start of the year type of deal. Who knows? So there's a lot of little factors there at play. I don't think this is a humongous deal, but I think PCE is more interesting to me, and to get a feel for some of that other inflation data that is not maybe as mainstream as CPI, but it's still important stuff to look at, just like kind of like the PMI and other different looks that we get when it comes to inflation data. So that's the look for this week. Nothing insane, like nothing that's like, oh my gosh, markets are going to be probably waiting for this to happen. Like everything here, like it's going to kind of the market's going to do what it wants to do most likely this week. And, obviously news that comes out and stuff. Let's jump over and check on futures, and I'll jump through some of the chat, pull up some stocks in here, and we'll dive through. So here's a look at futures. I'm looking at the micro E-mini S&Ps. Doesn't really matter, but look at the E-minis if you wanted to. Who cares? So here is the look at futures, and this is going back to the beginning of February, all the way back here. This big move was on that last Powell press conference, the FOMC meeting back then, Wednesday, February 1st. Okay, so this is showing you the entire month. A shorter month, obviously, in February. It's like 28 days, whatever the hell it is in February. 28 days, not a leap year. Leap year, I think, is next year, if I'm not mistaken. So kind of some levels to watch. We really this is the 1 hour chart. I cleaned up the grid lines. I think it makes it a little bit easier to view, but maybe not. So I think it's cleaner personally. So we can draw in our levels and stuff. It just makes it easier to see. So clearly, I had a level right here. This is kind of like that pre-Powell pump resistance almost. I can honestly get rid of this level because it's not really being respected as of now. But this is kind of our spot right here. So we came down to about 40.60 across the S&P roughly. This is on the micros. They're all roughly similar. And so we kind of double bottom. The reason why I say kind of is because we had a bunch of just wicks. If we look back and take a step back on the hourly chart, those are just wicks. It's not like we got a closing candle down there. And so this is like the level to watch first. I mean, we break down below this, and now we have a potential, continuation bounce. The reason, or continuation flush, not bounce. Reason why this actually looks pretty good, if you ask me, for the short side, Obviously, you got lower highs, so there's that trending for you. You kind of have a lower low here, although it's roughly the same area. But if we can't get back above this, what you're essentially seeing is, a very minimal bounce. And so you're still seeing that pressure. So we need to get above the highs essentially on Friday. And ideally, you want to do that, soon, or else that will only add to what looks to be continuation pressure to the downside. And that could probably be a nice setup for a short this week. That's just kind of how I'm looking at it. If I see a move down below this 40-60, higher probability this is going to go down further than just bounce here again and pop up, especially if we don't range right back up to the top of this kind of rough channel or this like downtrend. Like if we bounce right here, different story. But if we only get like, a third of the way up there and then start to reverse, which is kind of what it looks like right now, that's not a great look. So that's kind of the idea into this week. If I go to the 5-minute chart, what do we got? Yeah, I mean, nothing. 5-minute chart honestly is not worth looking at right now, because we had futures open up on Sunday night last night, kind of gap down right here, and then just have been kind of range bound, like slightly trending down, I guess. But I've been kind of range bound. If we just try to draw some levels on this, let's see if we can draw like a rough, it's not perfect, a rough channel on this guy. Yeah, we're just kind of range bound in that channel for now. So you want to see a break of that channel ideally, and then a break of that gives us the next move, I would think. All right, SNDX after hour price. I probably have to pull up Webull to get the better look on that. Just gonna pull that up really quick, and then we'll get a look. Let's see. I'm going to go to my bigger chart. SNDX after hours. I'm seeing 27.47, but that was the only reason why I'm seeing that is because there was only a couple shares went through at that price. You got at 16.16, you had at 3 shares. You had at 27.46 at 17.37, 10 shares, and not much volume. So a lot more volume. I'll do that later. A lot more volume around the 26-16 area. Not a ton of volume on that. But it did pop in the after hours for whatever reason. I think 50 basis points isn't off the table. I think that's fair. High retail sales, strong jobs. I think so. And hey, like if we get that 50, and let's say that the Fed is gonna ultimately over tighten, right? It just adds to the effect of the downside that we'll see, or the adds to the pressures and the problems we're going to see later on. Again, right? The lags. Everyone, wants it to happen now, and a 50 basis point hike. If they did a 50 versus 25, not a humongous deal, I don't think right now, but in 6, 12 months, 18 months, maybe a different story. Kyle pumping on in. 5-6 miles worked nice. I've been building up. I've been trying to get back to I used to run track, and I ran short like distance track. So we're talking like 400 meters max was like my max of like, I did indoor track. It sucked. I hated that so much. I lived up in Connecticut. So our practices were outside. Now, we had a nice track, but it was all snow covered half the time and ice. So it sucked. But I ran track then, which even my like longer distance cardio was not good. I played lacrosse throughout like pretty much my entire like life up until like, almost going to college. But I've been trying these days. I'm lifting 4 days a week, and then the rest of the days, those 3 days a week, I aim to do cardio of different varieties. So some days intervals, I'll do some days longer distance runs, and then some days I'll just do a mile and just kind of like trying to get my mile time down, because it used to be, which is nothing, it's nothing amazing, it's nothing great compared to like great, I guess, runners who do this stuff like all the time. My mile was like in the mid to low 6s at best, which I guess is like pretty decent, depending upon, your level of fitness and stuff. But my goal in the next like year, I want to do a half marathon in under 2 hours, which is nothing insane. I think it's very reasonable. But coming from someone who, like, when I first ran a mile, like the past couple weeks, I do a 10-minute mile and I'm like, oh shit, this is kind of hard. So I've gotten it down. I did like 5 miles a couple of days ago. Yesterday I did 5 miles in like 48 minutes. So I'm trying to keep it under 10, like a sub 10, 10 mile is like the goal first, and then we can get to that half marathon, bring that, average pace down a bit. It doesn't really take that long, honestly. You do it a couple times, a couple weeks, and like you're going to get that, you'll see that progression pretty fast, at least when it comes to the cardio aspect of things. So especially if you have like, if you've had, you know, if you've run in the past to some extent, you know, a little muscle memory almost, cardiovascular memory. But it's good. It's good. It's good for you. So I mean, I want to do it because I know I've been slacking on the cardio side for, you know, the past like probably a couple of years. I haven't really cared too much. I was like, no, just lift. You know, I lift 6 days a week, 7 days a week, and it's like, you know, it's just, you know, okay, cool. But other aspects of the health, I guess, are important too. As you start to get older, you realize that, I think. Alrighty. Beach bum in the house. Cameron, Kyle, let's go. How does one's share price change that much? It's just off low volume, you know. If you get a low volume, all you got to do is have someone slap, you know, or the spread opens up when the after hours on a lower volume stock, the bid and ask spread is like huge. And so it's pretty easy to see a couple shares, not like a ton of volume, but a couple shares go through at some high prices or low prices sometimes on small caps or lower volume stocks sometimes. Tossing some funny shorts from my recommendations. I think that's an underutilized or under tapped area of YouTube right now. I don't really do any like enough, or I don't do it like much, but I think it would be fun to do, just to have fun with it, to do like YouTube's pumping the shorts right now, I think. So trying to compete with TikTok and, you know, Instagram Reels and stuff. So those, if you got to have a good video, but if they have a good video like that's like kind of mass appealing, like it can do pretty well on that side of things. Okay, let's start diving into some charts here. So I want to start with yields. Let's start up here with yields, and we'll go through like the whole deal. So if we jump over to yields, I believe the 10-year is now at 3.84. So we popped over 3.9 on the 10-year yields briefly on Friday, and then it came back down. I'm curious to see if we get continuation here up on Monday or really Tuesday, sorry, or if we're about to kind of roll over and break this and start heading back down. I wouldn't be surprised if we do. Just kind of my take is that this move makes a lot of sense to me right now, in terms of, okay, well, what we're seeing is now a lot more talk about the Fed potentially doing a 50 basis point hike, yada, yada, right? Whatever number staying high, job market staying high. And if they were to go ahead and do that, great. Like they do a 50 basis point hike and whatever. But again, the bond market's way ahead of things. And so I think the 10-year is ultimately, you know, the closer we get, maybe if it can't pop through this and get back up to 4+, if it can't do that, you know, you might be getting ready to set the stage for, you know, where the 10-year wants to head in terms of pricing in 2024 and where the Fed and everything kind of heads later on. So it's taking its sweet time. It's doing its thing, but I just watching that carefully. I don't really have a lot of faith in the move of, and if I did, I'm just trying to be as objective as possible. Like if I'm thinking about this right now from a perspective, okay, higher, longer, fair enough, right? Higher, longer, but the bond market's, you know, looking at this higher, longer, and is like, you know, is going longer, is looking out longer than we can even realize right here. And so if that's the case, then what's the end goal here? If we do go higher, longer, right? Like at some point, we're going to start seeing hits and really big problems if they keep pushing the rates, right? There should be bigger problems in the economy, and the job market gets hit. It just takes time. So like, I think we start to potentially roll over at some point here sooner rather than later on the 10-year. That's just kind of my idea. And if I was going long the 10-year for a potential continuation, like, okay, if we can push through here, great. It gets a pump, great. But if we fail this, I would not want to be long, I really at all on that. Because again, and this is on the daily chart. So the longer this takes to play out, right, the farther or the closer we get to the end of hikes, the closer we get to the end of the road there, right? Wherever that is, higher, you know, whatever, who cares? But again, we're talking about like, you know, the bond market pricing this in way ahead of when the Fed gets there, right? Way ahead of when rates actually peak. So that's kind of my like concern with the long side of playing yields to the upside. I think yields really don't have much left in the tank. If they do, it will be short-lived. And that's the thing. If they do, like, it's got to happen the next couple months, you know, first half of this year. And I'm not talking about like day to day, or I'm talking like weeks to months to quarters right now, like on this kind of bigger perspective. It's got to happen the first half of this year, I would think, because I think the reality is, right, it's just not going to be the country, like the world, the country just can't operate with the amount of debt in the system right now with rates to the level that they're going to be for very long, right? They can do that for a couple months, for maybe a year, but I don't know if it can stay there for that long. So before either something big happens, right, that's, a major problem and we got other things to talk about, or like they're like, hey, we should probably start cutting things down here. We'll see. YouTube shorts addicting as hell. Digital warfare kind of holding me. Hudson investment, take it from an old guy. Keep going, don't stop. Working out later in life becomes more difficult as time passes. Yeah, I think I've been, I don't know. That's why I think it's a good thing too. Like, I've always been that way, really, since honestly, since I was 16, I really got into lifting and really got into physical. I used to be really strict when it came to my diet too. I'm not as strict now, although I take, my fair share of multivitamins and try to eat as decent as possible. Just because I feel better. It is what it comes down to. I feel better when I eat good. When I eat shit, it tastes good in the short term, right? But then I'm sitting there oh man, this is I kind of feel like shit and slow, whatever. And all that stuff. But I feel like I'm always going to be one that's going to be a proponent of the exercise and even the diet too. Because it's you're fueling yourself, right? So whether it's when you're thinking clearly on the charts, whether you're thinking clearly in your job, thinking clearly on this project, that project, doesn't matter, right? I think it all plays a little bit into each other. Now, could you be successful and not work out and not eat good? Yeah, you could, just like anything else. There's always people that can, but I think it's not going to hurt you if you did, and you're probably going to live longer, right? So I'd much rather have less health problems, pay less money in terms of medical bills and expenses throughout my life, and then live longer, right? You hope. That's just my take on it. So, okay, so that's yields. Let's see. What do we want to do after this? I want to dive into the dollar. Let's dive into the dollar. I went too far. Here it is. All right, so the dollar is this is another close watch for me this week. Is this. So it got above this 104 briefly on Friday on the dollar. Does this hold, or this was not a great looking candle here on the dollar? So I'm curious if this is going to hold or if it's going to start to kind of fall and flutter right back off. That'll be pretty, I think it should be pretty clear this week. We could have a kind of a consolidation. It's definitely slowed down. I think the past couple, it's slowed down the movements. The movements were a lot bigger, I feel like, late last year and into the beginning, or really just late last year. Ups and downs. So curious to see how this plays out. There are a lot of signs, with yields and the dollar, that and especially because the market doesn't always just kind of trade, day to day with that stuff, that the lag behind this, should put some pressure on stocks, potentially could. So if we take it a step further and we dive into, let's go to SPX, the S&P 500. I'm going to go to the weekly chart. Okay, here's the current range that we are in. Between this 40.35 and 41.95 roughly. So 4,200 and then just north of 4,000 essentially. So 4,000 to, it's about a 200 point range on SPX, the S&P. Here's the weekly though. So when you take a step back and look at this weekly chart, right? What do I see immediately? Well, if I draw in a level right here, we had two of these weekly highs essentially at the same spot, right around this 4,100, right? That takes you back to September right here, early August, September of this year, and also the point back in November. We got above that, and now we're kind of teasing around that same spot. If I can zoom this chart better, if it's not wonky every 2 seconds. Okay, so this is kind of a better look, I think. So this looks pretty decent, if you ask me, in terms of upside. If I'm just looking at this from a chart perspective, my gosh, and I'm not trying to sit here and try to play, Mr. Macro, I know everything, because I have no fucking idea what's going to happen, just as everybody else. At the end of the day, right? We can all have our speculations, but we really don't know anything can happen, right? And I look at a chart perspective, because many times the charts are pretty telling, right? The charts tell the story, and if the charts change, then we can adapt our thesis to what we see, right? If this area, again, if this trend line continues to hold, this is the key spot for me. If this area holds, which we have some room back to just about 4,000 on the S&P. So like 400 on SPY, 4,000. If that level holds this week, which again, we could easily break it this week. If that holds this week, it just looks good. It just does look good. So a break up over here above this 4,200 probably gets us to that 43 pretty quickly right there, the highs that we saw back in August. And then who knows at that point in time where we're at. That's like the next step, right? So I think that's the look that we're looking at right now. So, and again, a breakdown below 4,000 is going to be the nice downside. So like we're kind of in between. But again, if you are looking at this from a bigger picture perspective, like you got to make sure you're looking both ways. I see the upside. I can see the downside for sure. Just like a lot of people can see the downside. I totally can see it. Like if we crack down, I can see a waterfall. I can see a dump, whether it's a new low, whether it's a higher low, whatever the hell it is, and we can get rid of this trend line and reset and redraw, our levels, right? Great, cool. But I think the upside is also something to watch, and we're close to that as well. So if the market's going to be resilient and it wants to hold up again, right? We got to be prepared for that. So that's the look at the S&P. Let's see if I can pull up the Nas. Let's pull the NASDAQ. I haven't looked at the NASDAQ weekly chart actually here, I don't think, in a while. So let's pull, this is the NASDAQ weekly chart. Kind of a similar situation here where the pullback is nothing insane. We actually have a couple inside bars, right? So you have these, look at this weekly inside bar. So what that means is essentially our entire weekly candle, wick high and wick low from this past week is inside of the range of the week before that. And that week before that, so go back a week, right, was inside of the entirety of the range of the week before that. So you kind of have this like really like interesting setup for what would look to be a sizable move coming up on the on the NASDAQ here. This, I guess, you could say, hey, higher lows, it looks good long. It could be the short. It doesn't really matter. It doesn't have to be the long. But if we pop up over this high, which is around, it's just shy of 13,000. So it's like 12,900 here is the high. I'm going to just mark that really quick on the NAS, on NDX. We get above that level, my goodness. I mean, we could be looking at a quick pump well up into 13.5 pretty fast, which will be up to that August high. So that's what we're looking at, I think, on the NAS as well. And then below this, who knows? There's a lot more kind of price action here. So below this like 12,000 level, I would say, I guess the low of that candle is like 11.9, but let's call it 12 to be like round, or, and you can even match that 12 happens to be like right in line with this area right here, the highs that we had back in November before we rolled over in December and then bounced through. We break down below that. That's probably our look down for a push down towards maybe 11,000 and dare we say lower on the NASDAQ, which technically bottomed here in October, but we're not that far from the bottom, same way as we could be right back up to August highs like that. So just keeping an eye on both directions and being ready for both sides, I think, is the way to go. If we go to the Dow, here's the DJI. Clear zone right here that I've just kind of highlighted on this. So here's the weekly chart again on the Dow. We're just kind of taking a big picture approach, step back, right? These levels, generally speaking, are not going to happen this week. It could, I guess, the ones we were talking about, but most likely this is going to take weeks to play out. But we're just looking at a big picture approach. I mean, you got a lot of indecision. Like a lot of these candles right here are just wicks. A lot of indecision right here, right? Past 3 weeks. So we're kind of in this like weird limbo. We break above on the Dow 34,340, which is 34,340 roughly is like the spot. I draw a level there. Okay, that breaks that. Could be good for a pop up to that high that we saw back here in December. But the Dow looks good from a technical perspective, right? It had this downtrend that it broke, and it's now holding the retest. I mean, so it's doing what you want to see it do. It's looking good. I'll just draw a level at this low, the swing low there. So let's see how this wants to go. But I mean, if we look at this from a perspective right now, we're obviously skewed towards the higher end of that range, but we got to break down under like 32,500 on the Dow for that downside that next level of downside to establish. And then technically, I guess you could extend this trend line. I don't know how valid that's going to be, as you get out into like, March, April, who knows at that point in time. But the Dow doesn't look too bad either, right? Looks like a pretty nice setup. Let's look at IWM. Look at the Russell. IWM, the Russell 2000 ETF. So Russell's actually doing a very similar thing that we see with really strong stocks. It's breaking out, making a prior area of resistance now support. So our prior resistance from November, okay, we broke above that. are now holding that as support. Also to note here on the Russell, if I zoom in, we are doing the same exact thing as the NASDAQ. We have a double inside bar essentially on the weekly. So here's your range from a couple weeks back, okay? From the end of January, okay? We have a week of range completely in between that. And then this past week was even smaller in there. So we are essentially, if you look at the weekly charts, we're coiled up. Now, as I look at this, I just want to kind of frame my, I have a swing on a TQQQ straddle. I keep mixing those two up. Strangle is when I have two different strike prices. A straddle is when I have the same. I'm like straddling that one strike, if that makes any sense. It looks probably horrible. But like a strangle is kind of like I've got two strikes. One is like, you know, let's say on like a TQQQ is like $20 and one's 25, you know. And I don't want it to, I want the move to be, you know, outside, either way below 20 or above 25, whatever. This is setting up, right? Again, same thing for, you know, a coiled move, whether that's going to be up or down, right? The technicals, in my honest opinion, point up here, but, you know, again, it could easily break down. So if this kind of breaks down, right, cool. If not, this is setting up for a move in the next, you would think, couple of weeks here, right? Now, these are weekly candles, so you can't expect us to just kind of blast through. But, you know, we are looking at, you know, essentially building what was a prior resistance now as support. So if that continues to hold, that's a good look, right? You'd want to see that if you're bullish. So some good, there's some, we're kind of teetering on the S&P, it looks like, but we got some constructive looks here on the Russell for sure. And even the Dow. So we'll see, but that's where we're at least at this point in time. And I know I don't ask enough, but if you guys wouldn't mind the thumbs up button for those of you guys who are here who have done it, I appreciate you so much. And let's keep on rolling. I'm looking at weekly charts now. We'll dive into kind of like more zoomed in a minute, but I just figure we start with the weeklies to get a good frame of mind, like as to like what the heck is going on, big picture, right? Across the board. That happened, that put call ratio. Let's look at that put call ratio really quick. Put call ratio. What did happen? Put call ratio. Oh yeah, that got hit. Well, I'll go to the daily chart on this. This is the weekly chart on the put call ratio. That got smashed down a lot more calls about, you know, what is that? A week and a half ago, roughly, or go back in time here. Yeah, that got smashed. Jeez, on the daily too. Look at that. Jeez. Put call ratio. That, I don't know. I haven't really watched this too close, to be honest. So I'm curious, like, what the heck is going on here? Because I read that as I went deeper into diving into some of those articles about how this was being skewed with like deep in the money puts that essentially weren't really necessarily betting on the downside. It was like, okay, do I really care about watching this put call ratio? Let's see if I can find the fear and greed index and see what it says here. We're in greed 68. We're on the higher end, but not extreme yet. I think we barely touched extreme, have we? Yeah, we got into extreme like briefly into early Feb, and then have pulled back a little bit since, which makes sense. Put call ratios, boom, boom, boom. Where is it? Yeah, it definitely is. It's come down a lot. So, you know, we come back to this, like, you know, it's getting down to a relative low, right? We had a relative low underneath 0.8, which is good if you're looking for, you know, maybe the contrarian side of things. And it's kind of been a good spot to potentially, you know, last time we were down here in the put call ratio was the mid-August timeframe. We rolled over and went down a lot more on the S&P, made a new low in October. We were just still down way under that back in March, 6.65. So we're kind of in between on the put call ratio right now. So I work out mainly for health. I'm not gonna not tall off, look handsome, look like handsome is a good word to attract girls. No, I mean, I think when it comes down to it, that, you know, as they say, nothing to be cheesy, but like health is wealth. At the end of the day, right? If you can make all the money you want or whatever you can do, right? But if you can't enjoy it and you're not able to walk around, or you got other problems, like it's just like, you know, you're gonna realize like, hey, why did I care so much about these things and I didn't prioritize? Like, it doesn't have to be anything insane. I really don't think it has to be. I enjoy that kind of stuff because it's like a good way to kind of build routines and, you know, whatever. And it's something to work for, right? If you kind of have some goals, it's something to work for, right? It's easy to like, okay, I want to get to this weight, or I want to get to this, you know, mile time, or I want to get to do a marathon in this time. I want to get to bench press this or this amount of weight. It's kind of cool, right? To have those types of goals. just like anything else, right? In life, stock market, whatever. And it doesn't have to be that takes up your entire life. You can work your whole life. You can build that in and around your entire life. And, it's, not every day. And even that, if you did 30 minutes a day is probably great. 25 minutes a day is better than nothing, right? SPX doesn't look terrible, to be honest. Daily to me looks a little bearish for now. Let's jump back to that. So here's SPX, right? Let's go back to that weekly chart, right? All right, here's the daily chart. Here's the weekly chart. I'll go weekly first. Weekly looks pretty good if you ask me. Like I think that looks like decent. Again, right, breaks down below that trend line, different story that we have right here. But here's the daily. Pull this in. Let's zoom this bad boy. The daily doesn't look great, as good. But the only thing I would say is that Friday action is kind of weird, where we had, price action take you all the way down to almost the lows of the month of February. This bottom blue line is the low of the month. Let me get rid of this 4,100 level here right quick because it doesn't really matter right now. Market doesn't give a crap about it. But we came down, almost got to the low of the month, and then bounced really nicely. So curious if that holds with those buyers. There was some good volume too. Again, it was option expiration day, so not surprised. Monthly expirations, but we'll see what happens there. It kind of have a downtrend you can develop in here as well if you want to draw that through. Not perfect, but you can roughly draw something like that on there, and then we're upside. So let's see what happens this week. I'm really curious to see what we want to do. If we want to fill that gap, we probably have some room to fill that gap from Thursday going into Friday, that gap down, and then we'll see what it wants to do after that. It wants to roll right over or whatnot. Finally doubled my money on Mesa. Let's take a look at that. Patience and being stubborn. Let's see. Sometimes that's a good thing. Sometimes it's a bad thing, right? That is a beast. Look at that. It's crazy, though. It's so crazy to look at some of these charts, And if there's a lot of stocks out there that are kind of similar to this, that just got obliterated. And did you want to buy the dip? It almost made you break so many rules, unless you were kind of a fundamental viewer, right, on it. It breaks so many rules and you're looking like, oh my gosh, this makes no sense at all. I have no idea what this is doing. Why is it going down every day? Whatever. And then you get this massive, and this is an example, what looks to be like, maybe the earnings had to play with it, but also tax loss harvesting to a degree, right? Was that sell-off and then that massive kind of repositioning to start the year off. My goodness. Had you been watching it, got it from the low ones. The thing is at 3, it's up 300% off the low more. That's insane. That's insane. Actually, no, it's up 245. Sorry, not 300%. 245%. I can't do math. Even though I'm technically, you can technically classify me as a scientist almost for my degree, but I can't do math. Dow looks coiled up. I think so. Getting ready for this week. Sipping a White Club. Budweiser. Tripling the trading account this week, no cap. Don't drunk trade. Never drink and trade. Gonna have to check the setup on Pep. I typed in Pepe. Pep. What do we got? Oh, that sounds like pretty good. So I was looking at this area. This white box was a gap fill that we're potentially going to have a shot to come down and fill. We clearly did not. Built a higher low there, and we're like, screw that. I mean, this is a setup that, again, same kind of if you look back, go to the weekly on this thing, right? There's almost no sign of a bear market here. Well, there really isn't. There actually, no, there's not. Yeah, did it come down off the highs pretty nicely a couple of times? Yeah, but what have we seen, right? Every single time a higher low is established and we see a higher high soon after. So Pepsi literally hit a high, a new all-time freaking high in November. What? New all-time high. Not talking about a relative high. No, all-time high. That's insane. This is just a strong beast right here. If I jump over to pull up the dividends 2.6, I mean, as much as people give you crap for the dividend stocks sometimes, right? Instead of growth, I don't know. Let's even say you bought this thing at 130 post, pandemic lows. You're up 35% plus collecting those fat dividends along the way. It's just a beautiful looking trend, When that breaks, could be pretty cool to play the downside eventually, maybe, but I don't know if I would do that. I probably wouldn't fight Pepsi. Definitely not. But that daily chart looks pretty good. You want to see us breaking up over this 178 next for that, ideally. There you go. That's your level to watch for this week or early into next week. Whatever. We'll see how long it takes to get there. And then your low right here is just like 174.50. You want to hold that level, ideally, on Pepsi. So that's what I would put on the charts for now. Would love to get it cheap, but it's expensive for, maybe it is now. I mean, in a stock like this, I mean, yeah. A dividend, like if you look back, if you think about it, right, and you look at the overall market and stuff like that, you think about, potentially looking to be, really deploying some capital. And obviously we all like to say this after the fact. It's very easy to say after the fact, but like, man, some of these fat dividend stocks that you don't have to really worry about, like the whole like Fed's raising rates, like sure, fine, it's whatever. Sucks for growth stocks, and maybe there's more questions there. But for some of these solid dividend, beasts, essentially, just funneling money into some of these guys, man, when looking back would have been great. In hindsight, nothing insane percentage returns, but hey, you're just getting solid returns and you're not losing money. I'll tell you that. Said it in the Discord earlier, but I love XLV healthcare sector. Yes, I saw that. I did see that. Let me just jump over here. Look at this. This almost looks fake. This almost looks like actually fake. Like I'm not even kidding. Like you almost can't draw this like perfectly. Like it's just your channel to the downside. Let me just draw the top bound and bottom bound. It's easier to probably see. So here you go on that. That's your channel for now. Really nice. Pretty much a bullish engulfing on Friday, right? Yeah, pretty much you bullish engulfed. So it looks like we're probably going to test that top end of that channel. Maybe in the next like week or two, we'll see. But really strong action on Friday, and good volume too. Pop through, so it looks pretty good. I keep throwing us off with this like chart. Just adjust this over here. I'll just keep it like this so that it's all visible. I'm not covering anything up. But yeah, that does look pretty good, if you ask me. XLI industrial sector looks like it's just like the Dow, one good day away from a new all-time high. Let's see. Yeah. Oh my gosh, that looks freaking good. Jeez, I'm gonna add that to my. I don't think I have it on my list. I'm gonna add it to my watch list, just so that I can easily keep track of her. I have a list of my ETFs up here. XLI. I'll put that up in there. Okay, so look at that though. Oh my god, check that weekly chart. You want to talk about a swing idea? You want to talk about a swing idea for momentum? My goodness. It's XLI. I don't even, who cares about the freaking individual stocks with the exposure, worrying about news, earnings? I mean, that's just a swing, just waiting to be swung right there. Let's check the option chain on that. I'm actually kind of curious now, because I want to honestly incorporate more of this stuff into maybe the Robinhood portfolio, or who knows, because I love looking at these setups, and I've been seeing that a lot of these setups have been working. The problem is the executions, and then, trying to time it intraday has been the problem I've been having on this type of stuff. So let's see, XLI. I mean, if you're going to, okay, I started to give a framework of the idea here. Now, obviously, you can stop out, and you should stop out if it reverses. Like if this thing ends up rejecting here and like can't break a new high, like it's a stop out, like get out. Like I'm not going to force that shit. Like don't worry. Like there's no point to hold it. It's a chart. Who cares? There'll be other ones, right? And there'll be plays to the downside to take advantage of too. But, we break above, man, this. And what you can look at, what I've been looking and trying to do a better job myself and trying to dive deeper into this stuff is starting big picture weekly, looking for the big key levels, and then zooming in to see if I can see a setup on like a shorter term scale. So let's see if we can do that on this for an example. So XLI, Weeble, man, shut the hell up. I don't want to install you right now. I'm good. So that's the weekly chart. So if we think about extensions here, let's say this thing was to, maybe kind of set up, bull flag, and then eventually break through. That's probably putting you out. I would imagine this happens first half of the year. So, you would look at first half of the year expirations, right? You wouldn't want to, you could buy more time to be safe, but, maybe go like halfway through. So let's go out June, maybe, even September is probably safe, but June, let's go to June. So June options right here. Now these are not going to, there's some decent open interest. Spreads are really wonky because it's essentially after hours. So we'll have to watch what these actually trade. Well, these, I guess it gives you the last price. So you can see what they last traded at. So that's kind of cool. So if you look at let's say the 105, you buy like a little bit out the money contract here, right? That'll juice up if we get a push. And 105 is a nice, or you can buy in the money. It's a little more expensive, whatever you want to do. 105 calls on, let's say, XLI for June. So you're buying plenty of time. Delta's 0.48, not the best, but it'll move, right? If this thing moves your way. I'll pull up the charts. Yeah, let's see if I can pull up the weekly chart on this thing. Is it going to give me anything? Any data for the daily or weekly? It's kind of wonky. Whatever. Okay. Either way, this last traded for 343. So mid threes, right? For this thing. So the 105 calls. That means that your break-even price, this thing needs to get to 108 or 109 really to make money, right? So can we get there? Like, can we get to 109, right? Well, look at the move that we saw from October, September lows to now is about a $20 move. And that happened, right? Go to math. October, November, December, January, February. So it's almost 5 months. So maybe you want to give yourself, 5 to 6 months of time on this. I would honestly maybe buy that September contract. It's probably the safer bet. And you can get there. You can see a much bigger move here if this thing wants to go to all-time highs. It's not a bad looking chart. I'll tell you that. Not a bad looking chart. It's an idea. I wonder if you can look at if there are even just leveraged ETFs. Like, let's see, is that even a thing? XLI leverage ETF. Do they have that? That would be sick. They do. They do. Is this what it is? DUSL. DUSL. Daily Industrials 3X ETF. Now, obviously, it's a daily, so you got to be careful on that. With these leverage ETFs, but DUSL, check this out. Plus, you might even be able to get covered calls on this bad boy, right? Check this out. Check this out. Look at this. Yes, sir. Look at that. Now, obviously, so see the impact of the leverage ETF because, well, we're within striking distance of all-time highs, you would think, right, on the mother or the father ETF here for the industrials, this thing, right, is a leverage ETF. So it's not back at all-time highs. However, if you time it, roughly speaking, right, my view is like if you time it within a couple of months of the move or you time the move like and you get the general gist of the next move, you're fine. It doesn't matter, right? The leverage ETF actually works in your favor if things are going up, right? This looks absolutely primed. Just talk about a primed looking chart. My God, this is it. Above $37 is the look. And then that probably gets you within striking distance of all-time highs on XLI. Does this have to go to all-time highs? No. But talk about a potential move to all-time highs on a 3X ETF, right? That's about a 25 to 35% move plus you can sell covered calls, I would think. Let's see if they have options on DUSL. I'm just kind of talking this one through because it looks sick. Let's see. Go to the option chain. Not really any volume on the March. If I go out to, let's say, like April, I mean, you can try, but it doesn't look like it would be the best play. I would say the shares, and it's cheaper. No, it's cheaper, right? So you can just go shares, and you get exposure. And if the move occurs, you're probably looking at, let's say, if you're playing this right, you're looking at like, let's say, targeting up towards, let's say, $45. Let's just roughly call it. And so you can risk it down to about $30 for a 2-to-1, on the breakout. I would ideally want to be buying the breakout though. If you're obviously it's a risky play, buy the breakout. But hey, look at this chart. You are pushing up on that level. And the recent pullback, if you had a push up to this level, right? Like what we just saw right here, right? Big push up, big move down. Now you're right back there, right? So this trying to play the breakout right here, you're asking for trouble. And that's something that I would do in the past. And I need to do a better job. And I've been really kind of diving this past weekend, actually, more specifically, been looking back and saying like, where are the higher probability breakouts and lower? And I found myself seeing setups like this after a stock makes a huge move up to a resistance or support level, right? Coming up or down, doesn't really matter which way, trying to play that breakout or anticipating a bigger move, whether I'm holding a position, like I'm in the green, but I want to look for more, and then I end up getting stopped out because it rejects, right? Or maybe even entering something that has a bull flag set up that you were looking for a bigger push. like you anticipate it, but you're just too early and it needs some time to kind of cool down and just kind of consolidate for a bit. You got exactly that. Now you got higher lows. Look at this. You've got the freaking volume here as well, right? Ever since October, obviously it's, we're looking at the weekly chart here. You got the freaking volume that's setting up. You had a period of low volume. Now you got higher volume. This looks freaking good, if you ask me. This looks good. So whether you like it or not, I like that one. So you can play it both ways. I mean, that's an idea to think about, right? You can play it. Maybe you buy some Dussel, buy some Dussel. I don't know why it just sounds funny. You buy some Dussel shares if potentially you're looking at that idea for the breakout. You buy some Dussel shares. Right now we're anticipating a breakout. Let's see if we go to the daily chart. Does it make sense? Oh, I mean, god damn, this looks freaking good. Just looks really good. Obviously, if it breaks down, you can stop out, right? It's a small enough L, right? If it stops out, but this has what you're looking for, right? You have a nice big move, give it time to breathe, and now you're rolling back up. The thing is here too, is if we had this rejection and we came right back down to, let's say, all the way down, if not, you built a higher low, whatever. Let's say it was a higher low. It's still got a long way to go. I would still want to see it do, have some breathing room here. But you're getting that right now, right? Your pullback off that resistance, your pullback came down. If you do the math, right, it's like not even halfway back to this low, this swing low. And now you're building up into this level. This looks really freaking good. So if you want to anticipate a breakout, this is the type of setup that you would look to do that on, if you ask me. So yeah. Not a bad idea. At the money gives you some of that extra gamma exposure. Just don't hold to expiration selling a 2-month away. Yeah. Good find. That's on Flippo, dude. That's like, okay, I found the 3X, but he pointed out XLI. XLI is the find, and then we can look at DUSL for the trading vehicle, I think, to play off of that, right? But that looks pretty good. Is there a leverage inverse? I think there is. Oh, let's see. I'm sure we can find it. I'm sure there's got to be. What do they have in here? Dussel. I'm sure there is if you look deeper, but I don't want to kind of waste too much time and just starting to like doing research for other stuff. But this is the idea. Hey, and honestly, if you ask like me, I guess the option side of things, maybe I'd prefer to play the XLI, better spreads. Maybe it depends on the timing and stuff. But I like the shares of Dussel though. I like the DUSL shares for a trade instead of, and you can play it both ways. So maybe you buy some shares of that. Like I was saying before, you buy some shares and then you'd go with an option or two, right? See if I can find, this chart, this actually, now that I'm on the page, I may as well just find the other one. Give me a, let's see. Maybe it's not, maybe it doesn't have an inverse. I mean, it might not, interestingly enough. At least I'm not seeing it here. But yeah, you can maybe go with like, because the options are not that bad. So you can play on XLI, right? Like let's say something like that. If you're looking for the break, right? On a strong sector, this looks freaking good. Maybe some June, even September, just to be safe, You go with the 105s, which went for like $5. You can, they're going to cost you $500 for a position there. You got out to September. If the breakout occurs, you get a nice, thrusting move up towards near all-time highs, which again, on XLI, all-time highs. I'll go to the weekly chart. I'm jumping back and forth. Webull and then TradingView. All-time highs are 106. You get a push through all-time highs. It pops an all-time high. And, you just might want to take that off. And then you can hold the shares of DUSL for a potential continuation if you want to get there. So maybe that's an idea to play it. So you got exposure both ways with the shares the leverage shares and the options on XLI. That's going to be probably, now that I look at this, this is a beast. That is going to be a position that I take this week. I'm thinking, right? We'll see what happens Monday, Tuesday, or Tuesday, Wednesday, right? But I'm looking, that looks pretty good. So what I was saying before is that you want to look at the shorter term timeframes now for the entry. So let's look at XLI. I like to look at the parent ETF instead of the leverage, just to kind of get a feel for the technicals, because leverage will follow suit, but they could be kind of a little wonky with the choppiness, right? So you want to look for this thing. I mean, honestly, above 103.50 is like the trigger zone. I mean, the high that we saw back here on February 2nd is technically this. It's 104. 104 is like the literal trigger. If I forget, I mean, add an alert crossing up on that just in case. But that's if we have a good day tomorrow, we could pop that 104 pretty, we could be there. So for all we know, at least be getting, pushing up on that level, which again, right, the more pushes up at that level, the better this is looking, right? So I like the idea. That looks pretty valid. And I think that's the play for, that's a swing idea for the next couple months, maybe, So keep an eye. UBOT for 2X Bull AI and robotics. Let's check out UBOT. Well, it's kind of pulling back. Let's go to the weekly chart. So it couldn't really break this. This is kind of your spot that we tried to break that 1730. You got a wick above. You couldn't really break above. That's like the next trigger, I think, on that thing. But maybe you have an inverse head and shoulder setting up here, right? Or you had one, right? Essentially, not a great drawer, but that's kind of like the idea behind the inverse head and shoulders. So yeah, give it some breathing room now, but hey, this thing you get some pressure back to the upside. When that thing takes out that 1730, man, you can be looking at 20 quick, because then you got this other weekly high right here at 1875. That's your next target, and then beyond that is $20. Amazon daily not looking very good. Let's see. How did Amazon finish up last week? I wasn't really watching it, to be honest with you. Here's the weekly. I mean, this is not a great look on that upper wick is kind of nasty, right? This is a big upper wick right here. Like, whoa, what's up? That's not the best look. Bounced off this COVID lows. Yeah, bounced off the COVID lows at $81 area. Here's the daily chart. Yeah, it doesn't look great. It's just kind of like, to me, it's just like a weird area. Like, it's just a weird looking chart. Maybe you can kind of draw this in and say, hey, like right here, you got some prior resistance and maybe trying to turn support, I don't know, from back in like November, December, maybe something there. But it doesn't look great. But to be honest, like, do I even like the short idea below here? It's not like if it was underneath this level, maybe. But even that's like a small gap fill. And then there's actually that's maybe more important, I think, right here on Amazon. Underneath the low of January 25th is like 91.50 area. Then there's a gap to fill right here, and there's also one here. Then that could be a nice target for a flush down through there, But right now, I think it's kind of, honestly, to me, it's like an avoid. It's like, I'm not really not interested in that. Just let it do its thing and maybe give it some more time to kind of figure itself out, Maybe. What do you think about Netflix? Let's pull it up. I really like that idea too. I think that's a beautiful looking chart. I mean, again, the problem I think I think a lot of us have is the patience, right? Because if we look at those charts on XLI, the problem is that you could have seen those charts, 2-3 months ago and go, oh yeah, it looks great. But now we're calling at that and we're like, oh, this thing has had some time to breathe. It is just like higher lows. It had a nice pullback after that resistance. And now it's like pushing up against that resistance level. This just looks beautiful for a nice push. Sell puts on Amazon, that's not a bad idea. Not a bad idea. Not a shabby idea. Netflix. This does not look the best either. I would say, to be honest, I got a bunch of lines here. I can probably get rid of some of these lines. Let me just clean this chart up. Let's get rid of all this stuff so we have a clean look. There's a gap to fill on this down here. So this is the spot to watch. They're again, volume-wise on the right-hand side. No, not again, just Volume wise over here, not much volume from like 350 down to 330. And there's a gap to fill down to like 325 or 324, whatever. So this thing could just flutter on down into that zone. That would be kind of a target I would want to see. But just like the S&P, this kind of has that same look of the S&P, right? Where we kind of have, lower highs and lower lows, but it's almost like a flag. If we get some momentum, this thing right back it up at highs, boom, it could be right there within, a couple of days, within a week, boom, it's there. So it's kind of the way that to describe it is almost like the market just doesn't want to die. It's been given opportunities, it feels like, but it just hasn't had that next flush, that next whoa, big kind of sentiment shifting day or week where it's like, yep, we're in that next leg down. No questions asked. We are headed down right now unless something changes or news wise or whatever. We just haven't really had that flush and that feel, right? Here's future. Let's go back to futures really quick. I'm going to go to the 30-minute chart on futures. So we're kind of in this little channel or wedge, if you want to call it that, right now. We're kind of towards the lower end of that channel or wedge right here. But we're down about 0.27 from where we finished up last week, I think, roughly speaking, on the S&P futures. So it's nothing insane. You want to see us hold this low of last week. If not, I think that's the opportunity for the short side trade. Sell puts. I want to be, that's something that I think that when I have some more cash in the portfolio in the next move down, right? Because if you look across some of those bigger names, let me just jump back through some of those guys. If we look at the let's go through some of the large caps right here. I'll go to the weekly charts. I'm going to get rid of this Tesla, all these lines, just to kind of clear up the charts for now. It's at a key spot though. I think pretty clearly got a key spot, right? Consolidated here. This zone, also support zone. This is a pretty clear spot on Tesla to watch. But Tesla, right, has a nice bounce. Am I a buyer of Tesla? Am I interested in it right now? No. I was liking it down in here, but not anymore. I just let it do its thing. I got some Tesla exposure that I got to get. I'm trying to roll. In case it keeps going higher, I'm rolling those out. Apple, strong. It's a beast. It's strong. So, am I interested in that? Not really. As from a long-term portfolio buy, no. It's too high. Let it. It's great. If it wants to go make a new high and push, great, cool. But is it the best value in my view? Probably not. There's probably better options out there. Nvidia has already made a huge move off the lows, right? Could it keep going? Sure. Am I a huge fan? AMD, not as clean or not as nice as in Nvidia. It could be maybe more worthwhile on AMD. Any dips from here? Amazon is a lot more appealing in my opinion. Maybe some more concerns valuation-wise, but I think a lot more appealing in my opinion. In terms of where it's at compared to where it was, in terms of a better value buy. If you had to ask me, if we get a bigger move down, dare we say go to new lows, whatever the hell happens, Amazon under 80 starts to be okay, I can see that. Microsoft, it's reversed, not insane off the lows. It's reversed a decent amount. I'm not maybe a massive fan. Google, okay, I can see Google maybe too. Kind of like Amazon, right? Had a decent move down, and Google in this zone right here is kind of the spot that I was looking at. Hey, that would be a really nice zone to start potentially picking some up. Meta, I think your time, maybe there's better opportunities on a pullback, but that freaking move, if you wanted Meta, you had so much time to buy this thing, even under $100, but that would have been insane. So it's kind of like the bigger picture approach that I would be looking at for a lot of these things. We'll see what ends up happening, but I think there's some better deals maybe in Google and Amazon type of stuff versus your Apples and your Teslas and whatever. Would buy Boyle before Apple. SIJ is the negative 2x leverage. Okay, that's cool. So if you wanted to go short the industrials, here you go, right? Now, again, this is a similar chart, right? Where if you look at this, SIJ, right? You look at this level low right here. We're getting close to that level. This is looking like if I was looking for a breakdown short, this has that similar kind of look of okay, Big move up, big move down. You bounced, but guess what? You bounced small. That small bounce is telling. That says we still got pressure. We still got more pressure right now. Now this gives us a higher probability that this break occurs at some point relatively soon. So on that move. So that just kind of confirms the thesis on the upside as well for the industrial play. So, okay, back to that back to nat gas. Here's Boyle's chart. This is the leveraged natural gas play. I mean, that the problem that you have on it is that you just flagged and you broke down. So this is what I was concerned about. I ended up getting stopped out on this thing, but from it was a trade. It wasn't really an investment by any means. But I was looking at this and I had this flag kind of drawn in, and I'm sitting here like, if we break, like we're consolidating, but it just looks too nice. It just looks like it's just too quiet. It's too nice, and the consolidation also had lower highs. So I'm sitting here like, So when I stopped out, I think it was somewhere in here, whatever it was. I was like, honestly, if I was going to take it, I would even go short. I didn't go short because, of course, when I do, we're going to bounce massive and I'm going to be like, oh, that's great. But looking back, hindsight, it worked out. Look at that little breakdown. It's a beautiful looking breakdown on Boyle. So what do we got on nat gas here? Nat gas is actually, it's kind of flat. It's up barely, but it's kind of flat. Here's the natural gas chart. It's very similar setup, similar chart on natural gas. So now again, you had a big move down. Is it a short from here? Like, no, like I wouldn't short this, into new lows, but maybe the breakdown, I would have been more interested in shorting that to get a piece of that. But now it's like, I don't know. But like, I think we said a couple weeks back, or past couple, sessions, we talked about this. If it was, I'm pretty sure we even mentioned it on the live stream, like, hey, if we get if this ends up being a bear flag breakdown, that flush, gets me more interested, obviously, right? The lower this thing goes, the more interested. It's literally had no bounce, like none. There's no bounce at all, which is crazy. But look at NG instead of Boyle. Yeah, I much prefer looking at Boyle is going to kind of be a little bit, it's not perfect correlation. But you look at the natural gas charts is probably the better way to phrase or to frame that idea. Classic bear flag. Yeah. No, I mean, it's just a beautiful setup. I mean, I was concerned, about it, but again, right. It's like lower can go lower. And that's a perfect example of it. It's just continuing to do exactly what you would want to see it do for momentum to the downside. Like if you're going up, like that's the opposite of that pattern on the flip side is a great, bullish setup. So it's just like, you got the exact opposite. Yeah. Wall Street Bets post, some guy dumped millions into Boyle. I wish him luck. Oh gosh. I mean, it's one of those times though, right, where we look at it right now and we say, oh my God, it's just nasty. The momentum is all down. But again, you're going to look back at some point, you'll have hindsight at some point and go, man, it was an obvious buy. It's never obvious in the moment. But when Boyle or when natural gas is back up over 4, filling this gap, back up over 4, oh my gosh, like, how did I miss that opportunity? That's what you're going to say in hindsight. But it's not easy, especially on something like that, where, yeah, you can have an understanding for kind of like the storage reports and, weather and how all that just stuff kind of plays into it and demand and whatever, right? But, you look at it and you say to yourself, it's not the same as like fundamentally valuing a company, where you can kind of go, hey, they're like, Facebook or Tesla or Google, is like now trading at a valuation that is so low, like I got to buy it. And I don't really care what happens the next couple of weeks or months. I'll look at this buy in a couple of years and go, hey, probably was a good thing. Or, hey, the company ended up going to shit and I got screwed. That's a different way, where this is a little bit more difficult. I think they're more cyclical. They're much more cyclical, right? When you look at natural gas, oil, the commodity, it's more cyclical. So I don't know. That's kind of like I'm sure we're gonna look at that again and go, "Oh my God, it's either going." We'll keep watching it. I mean, I'm personally not gonna probably play it at this point in time because, I've gotten every time I touch that thing, I get destroyed every time. IPSC, look at this. This, talk about a bottomed out small cap. That is immediately going on the watch list. That is sick. I do have some room to add into an additional small cap if I wanted to. This could be one that hits the list because look at this. Freaking volume. Look at these volume bars right here. And we're still within really, I mean, hey, the percentage move to new lows from even the Friday move, right? 8%, 9% is a new low. So you're right there. You're not as volatile as some of these other small caps that we've been watching. But look at that chart. That's crazy. That is a crazy looking chart. But that volume looks so good right now. Earnings in March, I don't know if that really matters, but this is a market cap of 281 million. Okay, interesting. We'll have to watch that one. That's on the watch list now, but that is an interesting looking chart. Thoughts on SE? C Limited. Let's pull up the weekly chart first. All right. Higher lows. I mean, I do like the general higher lows that we're seeing right now. The problem is that when you look at this thing, right, from a perspective of like big picture, we are still down like so much right from the high. So you got to prove, like it's got to start to prove to us it's worthy. And I would think that this has to get up over this high right here, which is like $94 or so for it to start to prove to me, okay, it's now rallying back a good bit off these lows. It starts to kind of unwind, you know, maybe almost half of the move that it had down. And now you start to kind of play. I don't know if I'm a massive fan though. I don't know much about it fundamentally, so I can't really speak on it. It's got some better volume really ever since this year or ever since last year began. Key spot now is like 75 and above 75. You got a potential move up to 85 to 90, man. That's looking decent. I'll go to the daily chart now. Let's check this out. Yeah, I mean, if this low holds, this higher low holds here at like 60, what is that, 61? Above that 75 looks good. So you want to see it holding like the $60 area for now. GTII. Oh, that looks pretty good too. Green Thumb Industries. Is this a weed play? I feel like it sounds like it is. Green Thumb. Green Thumb Industries. That just kind of has that feel of like weed. But it's got some it's got these volume pumps. I don't know. It's interesting, to say the least, I guess. Maybe if it holds 1050, but kind of a wonky looking chart. It's good that it's getting above these 2023 highs, you know, $12. It looks good on that front. NSC, Ohio Oil Spill Company, NSC. That's getting crushed. Maybe, you know, it puts in a shoulder here, right shoulder, maybe, but too early to say at this point in time. Overstocks this point. That's how it feels, dude, these days. This past, we'll see. We're gonna see how we could play, how we could pick up the pieces here this next week. But I definitely think I'm gonna probably run or try a Top Step futures funding challenge at some point. Not right now. Probably I'm thinking after March, because just when I'm like back and focused in March, I have a couple of trips, some ski trips lined up. So after that stuff, because again, when you go skiing, you don't want to go on the weekends. Obviously, right? Like if almost my entire life, that's when I've been going. But when we make these trips out west, which haven't done very many, but the past couple times we've done it, if you're going to do it, like you want to go big, you got to do it during the week. You got to take the time off because, I mean, really, like you don't want to be in the freaking crowds. And this year is one of the most epic years for the West. In my memory, like, I don't know. I mean, we'll see. Anything can compare to this in terms of the amount of snow. But yeah, once I get back in late March into like April timeframe, maybe I'll see if we can run that. But I also want to get a better feel for simply just playing one strategy. That's it. And then that's the play. That's the plan. One strategy that works, the same exact setup, up and down, like bearish or bullish, just reverse the charts. Right? That's all it is. Play the same setup. And one of those setups we saw pretty nicely earlier on XLI. So watch that closely. Waver than Top Step. Top Step sucks. These influencers are swimming it. Well, that's probably why I feel like I've heard about it a lot, but I know that there's other ones out there. I've even seen some videos of people who are like trashing Top Steps and hey, go with this one instead. So I'm not opposed. It doesn't matter to me. It doesn't matter. I don't care who I use. Whatever one's better, you know. FOMC minutes is Wednesday. Yeah, Wednesday at 11 Eastern. No, is it 1? 2 p.m. 2 p.m. Eastern time is what I'm seeing here as FOMC. 11 would be West Coast, right? West Coast. All in Dussel. Now I feel like that we almost hyped that one up. It looked too good. It just looked too good. This XLI chart, this weekly looks just too good that we hyped it up. And of course, watch us get destroyed on this thing. No, there's no reason to get destroyed. I mean, the only reason you get destroyed is if you don't value a stop. There's a lot of ways you can look at that, right? Obviously, you can wait for the break, right? Wait for the break, or you can anticipate the break. We're right there. We're within like $1 of the break, so we're right there. And if we, I guess you can look at it saying, okay, 2-to-1 risk reward on this. If you anticipate the break, which is a risk, obviously, but you can milk out a few extra bucks, I guess off the break, and you're not paying a premium for options or for even just shares. A 2-to-1 risk reward puts you at targeting about 116. So 116, if you anticipate the break, is a 2-to-1. Now you don't have to do it. You don't have to play a 2-to-1, and that's if you were to go versus the high or low back here in December. I don't know if that even has to be the case. Like you can maybe put a stop loss under $100 and say, hey, if it can't hold $100, I'm going to get out. And I guess if you look at the daily chart, is there any where would the spot be? I guess this higher low would make sense, like this one. So I guess you can inch this target up. So what does that put you at? Like 97.30. And then if you go back to that weekly chart for the target for a 2-to-1, that brings your target down to let's see, about 114.30. So it cuts it by like $1.50 or so by keeping the stop a little bit tighter. That's a decent idea, And then we're looking at the weekly. So it ideally should take time to play out unless we get smacked and the market gets crushed, one of these weeks upcoming. And we get a nasty candle that just takes us through, which would take the stop, which would be, it's possible. I think everyone's, somewhat ready for that potential possibility. But just like anything else, if you're hoping for a black swan, type of situation, like you could be hoping for a while and you can miss a decent move up, which is fine. If you don't want to play the move up, it's fine. But, who knows at this point in time. Best setup for this week, that's this. In fact, that's this. And it's not even this week. It could go this week if the market's green. It doesn't really have to. If the market's green, there might be some relative strength here. And there clearly is relative strength here anyway. But this would be the look, and it's a swing. It's not even a day trade. It's a swing. That's my favorite look. Dussel gang now. I'm going to have to get some of those Dussel bags, Oh God, no stop. Please don't do that. Please don't go all in with no stop. Although it could be an insane move. Thoughts on meme stocks and tickers from Reggie. Let's take a look. I haven't looked. Let's just take a peek, and I'll wrap it up with this because I'm getting kind of hungry. Like honestly, I haven't got some chicken waiting for me in the fridge that we got to cook up. So I'll see what I can craft. But All right, AMC, let's get rid of all this stuff. Look at it from a fresh perspective. Okay, here we go. This is the weekly chart. So, not good. I mean, yeah, you got a higher low, I guess, last week that kind of tried to establish, but like, again, you are from a big picture perspective, it's just continuously lower highs, lower highs, lower highs. Like, that's all I'm seeing here. So I don't like it. Although, would I want to short AMC under $4? Absolutely not. Like, no, please don't, get into that. But I believe they've done some offerings. They've raised some capital. So like they've diluted shareholders a lot, I would imagine, right? So stock probably valuation wise, it can easily keep coming down, I would think. I don't know. I haven't looked too deep into it, but I would imagine, right? Lucid, LCID, used to be a meme. I think now it's probably, well, they had that rumored buyout, whatever news, got crushed off that, fell back under 10. Now it's kind of bouncing. I think you have a little bit of this kind of like, you got crushed, little tax loss harvest situation right here, got crushed. You popped. Now you want to kind of, it's in price discovery mode. Give it some time to kind of settle down. Not really price discovery mode. It's just kind of let it settle down. Maybe it holds this 960 area, but I'm not a huge fan. This huge wick is like, oh God. They have earnings coming up though, so that's the big thing to watch. That's this week. Yeah, it's Wednesday. This is the big one. So that is what I would say. Wait for the earnings, and if we're still above 950, maybe that's your risk on a trade or an investment or whatever you want to play, a swing or whatever you want to call it that, right? If not, then, okay, just leave it alone. Let it do its thing. That's what I would say. Playing calls or shares on the DUSL. So what I'm thinking about doing is probably both. DUSL. So this is a 3x ETF. So XLI is the actual ETF. That's like the industrial ETF. Then there's like 3x ETF off of that. So I would say DUSL shares or XLI calls. But if you're playing XLI calls, you better give it time. Because again, we were looking at this chart. This idea stems, like this chart looks so much better on the weekly time frame. Okay. You go to the 1 year, 1 day, look at all these candles. Like this is not as nice. So this is like, a lot of choppiness. Like it could easily kind of roll over right here, chop around, build a higher low, chop back around. And now next thing you know, it's like April and we're sitting at the same spot, right? So you don't want to get, if you don't want to buy an April contract and get screwed, because like if you buy that, you're not giving it enough time to either hit your stop loss or hit your take profit, right? You got to give it time. So we kind of just gave it, like we're saying, like give it 6 months type of deal, I would say. So like, 6 months plus of time. So I would do that. And they could be more expensive. You can go out the money, you can go in the, however, the idea is. But I would say this is kind of like my from a swing perspective. Here's what I would say. Could I cut it earlier if I got in right now on Tuesday? Could I cut it earlier before it gets down to my like stop loss low? Maybe if I'm looking at the overall market and we're breaking down to new lows and like we're really looking nasty, I can anticipate where I could just clean up shop and get out. But the general idea would be to risk it down. We had a move of about $20 off the October low. Could we anticipate a $20 move? That's a lot. I think 10 is more realistic, which $10 puts you up to that take profit around that 114 area, right? It's $11. That's roughly a $10 move. So that makes a lot more sense. That backs us into a 2-to-1 risk reward. It makes it, easy to visualize. And hey, we break down below this. I don't want to be anyway, you nice higher low right here, which is showing good strength because like we talked about before, right? My biggest problem has been trying to play these or anticipating breakouts or anticipating bigger moves after like some wild price action, right? So after some like crazy price action, we go like this, up, down, up. I would take a long or I would look to be in play for the breakout, or maybe I'm holding for a couple extra shares for more or whatever, options for more, right? And now I'm sitting here saying, hey, we had a huge move. Like, don't you think it needs time to relax? And then next thing you know, I'm kind of holding it and it just kind of chopping me out. And now it's giving it time to breathe, pulled back, push up, and it's showing strength. We like it. I think it's solid. So we'll see. We'll see what happens. Losing so much money. Had to kill. Hard to kill. Yeah. I have sold puts. Okay. Naked options on this. I mean, if you get into Lucid, right, you're asking for you're asking for some volatility for sure, which is not a bad thing. I mean, I'm sure the options maybe are decent, premium. You can get some good premium up and down, right? Maybe. But I don't know. That's the luck. So let's look at futures, then we'll wrap it up. So it looks like we're coming down a bit on futes. Yeah. Oh yeah, we're breaking that channel a little bit. We're actually at the bottom of the channel. So if you had to give me if I had to do something, right, I would say maybe a long here, but obviously it's risky off that balance, maybe. But futures are just low volume, minimal moves, not a big time move you would expect at this point in time. But with that said, we'll wrap things up today. Maybe we'll do a live tomorrow. I don't know if I can do it in the afternoon. We'll see. If I can, I will try to do it. If not, then we'll do Wednesday, Friday like usual. And that is the plan for this coming week. Hope you guys have a great rest of your week, great rest of your Monday night on this holiday. Market was closed today, but futures were open earlier last night into this morning. Now they're back open, and we're down about 0.35%. Nothing insane, but also not great, right? Not great. I'll see you guys in the next one. Peace out. Enjoy.